welcome back to another edition here on Mentorit TV. Well, I thought we are going to take a little bit of a break from our COVID-19 From Crisis to Creation series, simply because of quite some startling news I would like to get some more analysis on. And that is, I would like to talk about the Houdini of balance sheets, Wirecard. Wirecard, that fintech company, payment company in Germany that kind of made appear about $2 billion on their balance sheet and then disappear those $2 billion on the balance sheet. So I thought, not only how can that happen, but don't we have any kind of regulators in Germany, BaFin? Don't we have auditors, EY? Was there for the company? Don't we have the Supervisory Board? Don't we have other stakeholders that could just give a little bit of an eye onto what's happening on a corporate level? So ethics, the business of ethics, or business with ethics. And for that, to discuss this in more detail, I did invite Christian Dreyer. Now, Christian Dreyer, he is an independent analyst, and he used to be the CEO of the Charted Financial Analyst Society here in Switzerland, boasting over 3,000 chartered CFAs only here in Switzerland. Christian, so good to have you here on the show at such short notice. Thank you.
Thank you very much. It is a pleasure to be here.
Yeah, it is all mine, Christian. What a story. I don't want us to get into details. Maybe I will, because I'm a bit of a detail nerd. But still, let's talk about ethics. And if I look, and let me just share the screen with you. If I look at the CFA website, ethics, professionalism, anything to do with high standards and governance is exactly what your association does promote. So I'm going to quickly share a screen with you where I summed up a couple of lines that was on the website of the CFA Institute. So why ethics actually matter. So we start from the beginning, we start from, the bird's eye view, and then we'll drill down onto what actually happened at Wirecard and other companies before. Ethics can be defined as a set of moral principles or rules of conduct that provide guidance for our behavior when it affects others. Unethical conduct can damage investor trust, so we'll talk about trust as well, Christian, and thereby impair the sustainability of the global capital markets as a whole. Unfortunately, there seems to be an unending parade of stories bringing to light accounting frauds, manipulations, Ponzi schemes, insider trading scandals, and other misdeeds. I stopped sharing now, Christian. Give me a quick analysis of what I just read out. It's very important to me how these kind of high standards are there on paper, yet if you look at the grassroots, we sometimes get a different picture.
Well, ethics is indeed at the core of the CFA designation. So basically, if you're a CFA charter holder, then you are obliged, you are bound by the Code of Ethics and the Standards of Professional Conduct of CFA Institute. So as a community, we do abide by this set of standards. At the punishment, basically, of eventually expulsion as for a capital offense. So if you're found to be in breach of one of these standards, which, by the way, is quite a thick handbook to go through. So if you're found in breach of one of those, then you can be expelled from the association, from institute, and lose the right to use the CFA designation, and that's in a public way. So basically, your name is being published in that way, which is slightly detrimental to your reputation, I would think. But you're basically talking about how ethics impacts the corporate behavior, and how that is possible in an ethical framework. Things like obviously, or probably, Wirecard, like Enron, like Parmalat, etc. Well, fortunately, I think I can say that to my knowledge, no CFA charter holders have been involved in these scandals, in promoting them. So from that point of view, that's not an issue here. At least not in the narrow sense, but obviously in the wider sense of conducting business in an ethical way, and that's a somewhat narrow sense of the ethical way, because you don't defraud your customers, you don't defraud your investors, etc. So that's the basic sense of this ethic.
Of course.
Yeah.
Of course, let me just quickly interject there, because you mentioned right at the beginning, Christian, something that I think is awfully important, and that is reputational risk. If you risk your reputation, you do tend to risk also, of course, the trust of anybody involved in the financial markets, in the company, or even those that audit's supposed to audit the company. Now, from a bird's eye view, tell me, here, quite a few reputations are at risk, because you, of course, have the CEO, Mr. Brown of Wirecard, but you have the BaFin. That's the German regulator. It's like the FINMA here in Switzerland that regulates the financial markets, that is the watchdog. We all, as investors, as business owners, trust that if they say everything is okay, that it is okay. Very similar.
Well, I think we have to differentiate a little bit, as always. The issue is the regulated context in a corporate like Wirecard means that there is no direct. Well, let me back up a little bit. The purpose of an audit is not to basically discover fraud. The purpose of the audit is generally working with the assumption that there is no intention to defraud, but whether the representation of the business is fair, is the old wording was true and fair view, whether there is a true and fair view presented. But obviously, if you invest criminal energy in defrauding that, then the job of the auditor becomes so much harder.
Yes, I think the question of intention is hugely important. Of course, the audit needs to be neutral, and that neutrality really should show that, okay, there is a company, they're doing business. What they're presenting is just really, from a governance point of view, you would expect that company just to operate on the right side of law. But however, it is exactly those kind of pillars or linchpins in the system that are also set up, especially after you mentioned before Enron, you mentioned Parmalat, you do have Lehman Brothers, we have the junk bond king. I mean, we have so many past experiences that you think that Wirecard in this kind of instance shouldn't happen, because if the system in itself has gone through these scandals as of late, the reputational issue is an issue, the trust issue is an issue. So isn't there something fundamentally, I will just call it very, very provocatively rotten in how auditing firms are operating?
Yeah, but in the sense of that it does not gel with the public expectation of some sort of assurance against fraud. And this is really, I guess, something that might be changing, because also in the UK there is an ongoing discussion right now about whether there should be fraud, or whether the auditor's job should include detecting fraud. And the UK.
What do you think, having been also the CEO of the CFA? Should
what's that?
What do you think? Should it be also the job of the auditors to potentially look for fraud?
From an investor's perspective, we would the natural inclination basically is that an audited financial statements should also be fraud free, not erroneous or something like that. So I think from that sense, it would probably make a lot of sense to actually include that in the mandate. That said, however, this probably would also imply that the auditors would charge quite a substantial amount more, put more effort into it, become more intrusive also in the corporate financial reporting. But maybe that's not such a bad thing.
I was just about to say, maybe that's not such a bad thing, Christian, especially in the long run, really, because there's nothing worse than what is happening to Wirecard, its stakeholders, its shareholders. And talking of which, you were talking about earlier on, like naming and shaming. Okay, so you have those people that raise a red flag. And that red flag on Wirecard, if I just may fill everybody in a little bit, was raised already in April 2019 with an article, maybe even earlier, but that's the earliest I could dig up. In April 2019, the FT had an article and they were talking about suspicious transaction. In October of last year as well, they said that it seems some of the sales and profits were inflated. And even KPMG got involved and they actually said we audited, but we could not actually conclude if sales or profits were really there for quite a few years, 2016, 17, and 18. However, it seems that Ernst & Young kind of went ahead. Just one more thing. Last year, we had SoftBank, the Japanese bank, investing about $1 billion in Wirecard in a convertible. Convertible means that if they pull out, or they can convert that 1 billion into a 6% stake. And they said, they spoke to BaFin, and that is a German regulator, and just took their word that everything was okay at Wirecard as their word. Now, who was negligent here? Who was negligent? Who is really the one accountable, responsible to really drill down if somebody like the FT raises the flag?
Well, let me answer that in a somewhat roundabout way. First of all, I mean, the FT journalism in that sense has been a stellar piece of responsible journalism. So applauds for that. And especially in the face of the attacks that they've seen, very aggressive attacks, both from Wirecard and the German regulatory community. So basically, if I'm not entirely mistaken, BaFin has launched a criminal investigation into the journalists for crying out loud, rather than looking at
the company and listening for a moment, just saying, yeah.
So basically, they I think there is that's probably an example of too much corporate trust in the German scene, if you will. There's been they've been building a fortress around the Wirecard company, which is which was perceived as one of the German leading companies in that space, and that has been a matter of national pride, maybe, if you will, and that's certainly something that you really have to be careful with, because once you're invested that way, then it's really hard to get out. Without very severe.
It really is not. It really is not laughable. You know, you have a company, $12 billion US market cap, and just imploding like this. And then after it's down about 95% in its share price, you've got the traders in where you've got moves of 200% to the upside. It's mad. It's really sad for investors, and it's sad also for the standards that have been tried to not only been established, but to apply it also. I wanted to ask you, Christian, and that is conflict of interest. Now, there is one very interesting university professor, Atul Shah. He's an accounting and finance professor at the City University in London. And he says that there's a fundamental issue with auditing companies. That is your grandpa's clock. I love that.
Indeed.
What's the time? 4:30.
Well, it's a little bit early.
That's fine. Anachronistic. I love it. Okay. So, and basically he says that there is a fundamental problem when it comes to auditing companies. There is a conflict of interest because auditing companies have, as their business model, gotten more and more into the advisory business as well, such as, for example, McKinsey is doing. And he thinks this is a conflict of interest. Either you're an auditor, so you're not involved in, making the business grow through your advisory, or you're an advisor making it grow, and then whatever happens, happens. What do you think?
Well, that is clearly a conflict of interest. That's also the reason why the company, the auditor, cannot take consultative work for the firms that they audit. So that is precluded. That cannot happen. But the other issue is, though, how long can you be an auditor for the firm, will you actually know the workings of that firm inside out? So it takes a lot of time to get into the business or the business model of the company, and once you're in, then you're already due for change again. So there's that rotation issue as well, where auditors are expected to rotate every 5 years or so. So it is always a tricky, it's a tricky decision. But nevertheless, that conflict of interest aspect of the consultative business is certainly a crucial one, and it's hard to say what the recipe is to not compromise the auditor's independence. Because obviously the competition is also on the downward. It is on a downward spiral, if you will. The price of audits is basically nowadays done on a bottom line aspect. So how much does an audit cost with your firm? And then they'll obviously apply their usual hourly rates and have an estimate of how many hours does it take to arrive at this assessment, that's quite easy to see how the pricing for the audits are going down.
So what could be the solution when you say, a lot of companies may not even be able to afford, excuse me, very expensive auditing and all these hours to just make sure that they don't have a reputational risk? I mean, it should be fast if you are, playing with straight cards. Should it be something that is maybe nationalized, rather than being in the hands of private companies that also try to make money, that you do not only have the BaFin as, the regulator, but also the watchdog?
I think the issue at the core really is that the auditor is paid by the auditee, by the audited company, and then you have an issue that again, it's the same thing like with the rating companies back in the days, right? That opinion is flawed, if you will, by the sense that the personal, that entity that you're looking at is paying for you to look at it, and the old adage goes that who pays controls what is happening.
Who pays that pays, yeah.
Yeah. Obviously, that cannot happen, or that is at least formally not the case in this construct. But there is always that temptation for it to happen. And how do you deal with it? The current situation is that you deal with it by having a powerful auditor supervisor. Supervising company of the auditors, which actually has defined standards that the auditors have to follow, and actually prosecutes again those auditors who fall foul of these. And I think the job of the German auditing firm, auditing supervisor, certainly has become easier now, because they will have to impose much stricter standards. And the other issue that is being discussed in many circles is that maybe it is really time to go away from that national authority within the EU for audit firms to be supervised at the national level, to be replaced by a European auditing supervisor, just like in the US, where you have a very powerful and aggressive auditing supervisor as well. So by that means the distance between the auditing firm on the one hand side and the auditing supervisor on the other will become further away. So they're much more at arm's length, and that basically would probably, in all likelihood, increase the authority as well of that auditing supervisor.
Yeah, it is true. The Americans are a little bit more aggressive, that's for sure.
Mm.
I think communication and
But it
dialogue
did not prevent Enron.
exactly. That was my next line. I said, but still, you know, and then since then the financial crisis. So, you know, this is my next question, Christian. You know, let's be empathetic and put ourselves into the shoes of the investor. So I would come to you, say, look, you are charting these financial analysts. They're going to get their, you know, Gütesiegel. They stamp that they are trustworthy people. Who can I really trust as an investor right now? Who would you send me to?
Quis custodit istos custodies, huh? who basically supervises those supervisors, etc. Now, who can you trust is really a matter of it's a difficult question. Ultimately, it's a matter of trusting the individuals that you're working with, of trusting their background, trusting their interest, of having your interest in mind. So having full disclosure about what actually drives them, what motivates them, etc. That is certainly crucial. But when it comes to investing, there's very little that can that is better than doing your own homework, essentially, and understanding what you're investing in. So it's still we're still in a capitalist system where the buyer beware. Actually counts.
But then again, me as a buyer, I look at the auditing, I look at the okay from the BaFin, I look at all the authorities that claim that they're trustworthy. I mean,
but still, look, you also need to look at the spectrum of analyst opinions. For instance, that's something that I always like doing. And there were a couple of analysts who had a price target of 0. With Wirecard for an extensive period of time, because they just couldn't make sense of it, and they were ultimately proven right.
Amazing.
Yeah,
that's fascinating. And everybody kind of chose to ignore, or a lot of people chose to ignore, considering that Wirecard entered the DAX, kicking out Commerzbank at some point. So I guess
no, it's crazy. It absolutely is crazy. But I just saw an article or an interview with one of those analysts who basically said that he was looking at their financial statements all the time. He was looking at the statements that the CEO was making, etc. And he was using very many buzzwords all the time with very little apparent deep understanding of what was going on. And then the numbers didn't really add up, especially with those trustee accounts. So basically what it boiled down to is, for them, there were a set of red flags which were unresolved over the years, and that led them to that assessment of Wirecard being a non-value from an investment perspective.
Yeah, and coming back to the conflict of interest issue, you know, what I figured a little bit also, Christian, is that you talk about the supervisors of the supervisors, or the supervisors of the auditors. Many times, those are actually filled with the big four auditing companies. Again, you know, they might have old cronies, it's the networking, you know, you just don't kind of backstab anybody in your industry. So, difficult.
It is. But like I said, it's important to actually have these structures in place and fortify the structures as well. Create an environment where the supervisor of the auditors has an interest in being strict with its supervisees, and not be too chummy with them. So that is certainly
The
absolutely
incentive.
crucial.
That's
Yeah.
exactly it. That's exactly
Yeah.
it. And I think, and I want to ask you that one, Christian. How is this going to play out? You think in
Well, first of all, obviously, we need to learn what actually has happened. That will probably take a lot of time. But I would not be surprised at all, actually, if the initial business model, the initial ideas were sound, and then we started off with the ethical context, right? I would not be surprised if they started off with a sound business model, with a sound setup, but then got overtaken by success. They used some shortcuts. Nobody complained about those shortcuts. Nobody understood the shortcuts, and then they went from an initial small shortcut to bigger shortcuts, and then, again, still nobody questioned them until somebody did, big time.
Yeah. And I think what you were saying earlier on also with the analysts, what I mentioned with the FT journalists, that anybody looking to invest in a company like Wirecard or any kind of companies, it is really a multitude of sources you need to look at. And if there's conflicting messages coming through, that means first red flag, and it means drilling down deeper maybe on where the information is from, and what is perhaps the objective of communicating it. So one of my last questions on Wirecard, and then I would like to talk a little bit more about you, Christian, yourself, is if you were in charge on a European level, who would you make accountable for this fiasco in Germany? That is a fiasco not only for a Wirecard, but the financial industry, for the fintech companies, and ultimately also for Germany as a country, as a secure and trusted hub where you can invest.
Well, you would have to probably split who, if it was a clear case of fraud, then it's the fraudsters for sure, who would be accountable, and who actually would be good to have somebody of those eventually ending up in jail. Very often, white-collar crime does not go to jail, and that's a horrendous thing, because every common thief actually will end up in jail, but the white-collar ones don't. So that I find highly disturbing from again an ethical perspective. But the going forward aspect, so that's the accountability, the backward looking sense of accountability element, and that would be the firm itself. Going forward, it's about strengthening the framework of audit firms, of supervisory firms. BaFin, obviously, with the bank, with Wirecard Bank being responsible for that, is also the question how you can actually support these structures, and it probably would make sense that the European entity would become responsible for the audit supervision, given that some of the probably the most crucial entities that were responsible, that were instrumental in this fraud, were outside of Germany. So yeah, I think that's probably what I were to look at, and what I would do if I were to look at.
Yeah, no, I think there's a lot of very, very good points you were making there. And in terms of what makes life worth living, if you had the chance, looking back, or do have the chance, looking back at your professional life, Christian, what are the key learnings you would want to pass on, be it in your modus operandi, what you've learned, let's say up to 3.
So that is obviously a very general question. I think the important part is obviously having a very good education. On that side, I'm very happy with that. Another very important part is having a broad network with different layers of network that are actually operational, and there you can also use your professional organizations, volunteer engagement, etc., with these kinds of organizations, because it's not just in the strict commercial environment where you're active. Personally, I think where I would invest even more time in really is managing personal relationships more in that specific commercial relationship as well. So that's certainly something that I've learned over the last couple of years, that this always pays to invest more time in that relationship aspect rather than the strictly commercial business aspect.
So it's deeper values there as well.
Yeah, it's. I think. I mean, even from a personal perspective, it's much harder for your opposite side to stab you in the back if they know you.
True, trust.
Yeah.
No, that's great. Christian, thank you so much for joining me so quickly here on Mentory TV on that issue when it comes to Wirecard, representing really a broader issue, and that is good corporate governance, and also the entire question of who is auditing who, the check and balances system, accountability, and how basically, you can create $2 billion and you can have them disappear again, despite all of our, linchpins we're trying to put in, that if they're pulled, the system falls back into place. But it's a really difficult one. So thank you so much for your analysis, Christian.
Pleasure. By the way, you started off saying that you wanted to get away from the COVID.
I wanted to take a break on that one.
Yeah, but actually, it might not be such a far distance, because very oftentimes in times of crisis, these are the time slots when fraud cases actually become apparent, because everything else changes, and then some questions are raised that in normal day-to-day operations would not be raised. So I think there are the outgoing ebb basically shows you who is swimming without their bath suits on.
Yeah, absolutely. Naked. Well, Christian, that's a very good point, and thank you very much for putting this in. And if, as you were just saying, Wirecard in some respects shows really there is a crisis perhaps in the system, and we need to recreate it. So thank you.
Indeed, thank you.
And thank you as well, dear Mentory TV community, for joining us yet again here on the channel for another episode. Well, this time I did chat to Christian Dreyer. Make sure to continue to comment on the show. Tell me what you would like to see. If you have got great guests you want me to, reach out to, I will do that for you. So thanks so much for being with us here, and I see you soon next time. Bye.